Hello everyone, welcome to Bitcoin Not Crypto. You can find me on Twitter X at ForestTotal, and in today's video, I'm going to be talking about this little tweet here. It says Blackrock says Bitcoin is risk-off as a global monetary alternative, while ETH is risk-on as a blockchain play. Bitcoin is money, the rest of crypto is just a gamble. This is what Bitcoin News says. And this is a photo from what looks like a actual presentation. And up on screen here, we have, I'm going to not bother going into Ether and ETH. We should pay less attention to that in general. I'm just going to talk about what they say about Bitcoin. It says number one here, global monetary alternative, global, decentralized and non-sovereign asset that could serve as a hedge against increasing global disorder and declining trust in governments, banks, and fiat currencies. Risk on versus risk off. So this says risk off, and illustrative funding sources says gold and alternatives. Now, I'm not sure what they're saying here is that Bitcoin performs like a risk-off asset. I think maybe what they're saying is that some of the money that is going to go into Bitcoin is going to be risk-off type money. And of course, that's going to affect how the asset actually performs, and it might be more correlated to other risk-off assets that we've seen in the past. So I'm going to bring up a chart here. We have the longest running ETF in US dollars here, BTCC.B, which is on the Toronto Stock Exchange, but it's in US dollars to get more accuracy. So in the red line here, we have the NASDAQ QQQ, and in the purple, we have GLD. So those two assets I would consider risk on with the QQQ, risk off with GLD or gold, right? Tech stocks versus gold. That makes a lot of sense. Risk on versus risk off. Now you can actually see gold has had sort of a monumental run here. So it seems to be disconnecting from the risk on asset of QQQ, which is kind of just moving within a channel here within the past few days, and gold has gone on this absolute tear. And you can see Bitcoin has actually gone down. So right now we see Bitcoin not trading like a risk off asset. You might actually, if you look into some global stuff, you might think, okay, well, why is gold going on this tear? Why is it hitting all-time highs? Well, that actually says a lot about the way that nations are allocating their money. They're taking it out of other assets and trying to get into something exactly like BlackRock explains here, something that is a hedge against increasing global disorder and declining trust in governments, banks, and fiat currencies. Now, that is 100% the way I look at Bitcoin. However, Bitcoin definitely has a little more of a correlation with the NASDAQ. So let's bring up just the NASDAQ here. You can see here on the left, Bitcoin starts to go down and NASDAQ sort of goes down with it. And then it comes up and it spikes down. So it's more volatile. The movements are much bigger. You can see actually here's a little bit of a divergence as well. So QQQ going up and Bitcoin going down. And once QQQ has peaked, Bitcoin starts going up as NASDAQ starts going down. So there are periods here like this, to me, looks a little bit more like a period of divergence, and like that Bitcoin is acting more like a risk-off asset. You can see here massive outperformance, of course, but again, this part here in September is tracking Bitcoin with the NASDAQ, and we can see some correlation and connection. And now if we overlay gold, are we going to see some connections as well? We can see gold going up as Bitcoin goes down, so it's not acting like it. Gold staying sideways while Bitcoin goes down. Bitcoin going up and gold actually kind of coming down just slightly, but mostly going sideways. And gold is kind of having this steady grind upwards as Bitcoin kind of went consolidated in this sideways and down channel. And then Bitcoin broke out above. And again, we're seeing a little bit of connection here, possibly. And then Bitcoin diverges very much so, from gold, which is actually going down at the time that Bitcoin is going up. So again, you can see some crossover from a risk on asset, some from a risk off asset. And this is what I really want to talk about. The idea that Bitcoin is both a risk on asset and a risk off asset. And it is wildly understood by a small percentage of people and wildly misunderstood. And even the people that really understand it, there's still things they don't understand about it. But they understand where it's going. And they understand that everyone has to adopt Bitcoin. There's no choice. There's going to be a time where there's no choice but to adopt it. And when that begins to happen, game theory, all these things that play into that moment, it's all going to be gradual. But when it happens, and as it's happening, as we see it happening, this is why Bitcoin's price has gone up so much over its entire existence, is because there's more adoption of it. We know that Bitcoin will be a risk-off asset compared to everything else. I just read their blockchain BS about ETH. None of it is relevant. None of it explains what a risk-on asset even is. So we kind of have to just look at what the opposite of a risk-off asset is, right? If we think about a hedge against increasing global disorder, so that means a risk-on asset would mean that we believe that the future of the globe will be orderly, that we think that it will be good, right? That we and declining trust in a risk-off, so in governments, banks, and fiat currencies. So this means we'll have an inclining, or we'll have an increasing amount of trust in governments, banks, and fiat currencies. So this is where I believe, again, that Bitcoin is a risk-off asset. Ultimately, and it might suffer in the short term because it is highly liquid and trades 24/7, and people actually have some amount of money in this, some amount of value in Bitcoin compared to all these other cryptos. I think that in the long term, it performs well because of the failures of governments, banks, and fiat currencies. And we can look and we can know that fiat currencies last roughly 22 years on average before they completely fail. We can see hyperinflation in many places around the world throughout history, where it becomes cheaper to use the money as toilet paper than to buy toilet paper with that money. There's stories of going into a bar at night with your local currency, paying for your drinks ahead of time, because by the end of the night, that currency has inflated so much that it would buy you less drinks at the end. And hyperinflation largely comes from a public mistrust in the value of that currency. Now, it's my belief that the US government is trying to create strength within their dollar. They are even going to leverage crypto assets to do so, largely through stable coins. And you should look deeper into that if you're wondering how that's possible. I'm not going to get into that right now. But I think no matter what they do, in the long term, they will fail. Fiat currencies will fail. The governments will not be able to cut enough spending with Department of Government Efficiency. The banks will default on certain amounts of their debt. The governments and the central bankers, right? The banks, right? Part of the banks is the central bank. They will debase the currency to try to get themselves out of that situation that they've put themselves in by putting on too much risk, and the globe not accepting that risk at certain moments. And in those moments, Bitcoin will shine, because Bitcoin is completely disconnected from these things. That's why BlackRock is talking about this being a risk-off asset. That is how it's a risk-off asset. When you buy Bitcoin, you are participating and owning a piece of a monetary network that cannot be controlled. There is a confirmation that happens. The decentralized node network all agrees. The miners put your transaction in. You do not ask for permission from any government, any central organization. You just participate within the system that is built, the Bitcoin network, and you can transact, you can move value, you can hold value, you can hold it cryptographically secure, even more so than your bank account. You don't open yourself up to third-party risk. You have it in self-custody, and it brings power back to you as an individual. It brings value into your own hands. And in that way, it's very similar to gold. So we've seen historically, it only trades with gold sometimes. It trades against gold other times. So I don't think they're saying in this that it trades like a risk-off asset. I think what they're saying is if you fundamentally understand Bitcoin to some degree, you'll recognize that it is fundamentally, the way it's built, is it is a risk-off asset because it does not have the risk of government seizure, of bank money debasement and fiat currencies, and it does not connect itself with any of these things. Its price might fluctuate because of all of those things, but that's people's sentiment around this asset. They have not yet figured out that it's a risk-off asset. There's so much volatility within Bitcoin because people still think that it's a scam, that it's going to zero, that it's a pyramid scheme or a Ponzi scheme. They don't understand what it is. They think that somebody's going to tokenize gold and that's going to be the way that they're going to transact in the future. And that tokenization creates centralization, which creates power, which creates paperization, which creates it still needs that physical assurance that token can be represented and can be given for something physical. Whereas with Bitcoin, the physical tie is the Bitcoin mining and is the power that it took to acquire that Bitcoin. It's all built in to the system. So in my eyes, it's a risk-off asset. Whoever's doing this presentation here on this picture has got it correct. Now, they're talking about ETH as well. They have an ETH ETF. That's their connection to crypto at large. They're talking about blockchain. They're talking about BS. They're talking about all sorts of stuff. And I think, in my opinion, that is all noise. What you're interested in my opinion, should be Bitcoin once you understand the inevitable future that we will have, and that Bitcoin will stand above everything else and allow you to hold your value throughout time and space and have the ability to move that with you throughout this uncertain future. Now, if you want to get yourself some Bitcoin, I've partnered with a few companies that I personally use. Two of them being Bitcoin Well, which is a non-custodial exchange, which means they never hold your Bitcoin for you. You send them dollars, they'll send you Bitcoin directly to your hardware wallet. And the other one being Stampseed, which you can actually use my code and get 15% off at. And it's a way to preserve your seed phrase, which is a recovery mechanism for you to gain access to your Bitcoin again. If you lose your hardware wallet, it gets stolen, lost, whatever. And you can take that seed phrase, it's fireproof, crush proof, corrosion proof, all of these kind of things that are important. And you can take that with you, you can hide it, you can do all sorts of amazing things with the seed phrase that kit that Stampseed has. So there's a reason I partner with them, right? Of course, they're both things that I use. They're both things that are Bitcoin only, and they're important for owning the Bitcoin that you buy. So if there's anything I missed here, if there's anything you want me to clarify, anything you want me to go deeper into, use the comment section on YouTube to ask that, to say that, and we'll see you on the next video.